All right, let's go crude. Okay, what we like to do is we like to play off these profile levels. This is volume profile that called the high on crude this morning. We have a red plus signs. We have green plus signs. Red is high value area or HVA. Green is low value area or LVA. We do not have the control point. Control point is hit and miss. We don't use yesterday's control point, HVA or LVA. This is intraday. It's more accurate. So what we're doing is when the moving averages are flat, the longer term moving average, we're allowed to sell the high. Sell the high. So what we have here is we have high value area came into it. Once you come into it within 2 ticks, maximum 3 ticks, I want you to come over and look at the 3 Simrenko bar and pull yourself in. You just don't sell it when it comes up to high value area with overall trend direction. As you move up, look at your Renko bar. You don't play off the green bars and you don't play off the red bars. You play off the blue, which are called spinning tops, or you play off the plus signs, which are dojis. They're reversal candles. Once they form, take the highest doji or spinning top right when you hit within 2, maximum 3 ticks of high value area. And you're going to look for closed body of the candle's got to close. The body of the candle, not the wicks. The second bar, the wicks, you see it's got wick right there. That's a wick. The second bar, I want the body of the candle to close below. Body of the candle, the wicks don't count. It's typically going to be the second bar after the doji or spinning top after you hit high value area. That's a good rule of thumb for you to understand. There's your second bar. Look how the body of the candle closes below the spinning top. That's your entry. Open it up at the next bar. Your stop should be a maximum 15 tick stop. Some traders like to put it 2 ticks above the swing high, especially on the 5 sim, to have a lower stop, but maximum 15 tick stop on all these black chart trades. Don't risk more than $150 per trade. So that's a maximum $150 risk. I like using a 13 tick stop myself. Don't risk more than 130 bucks. Your entry is going to be the open of this bar. If you use the 2 ticks above the swing high, you would have 11 tick stop instead of a 13, a little bit lower. So you'd risk $110 on this trade. When you enter the trade, you got your maximum stop already placed. Don't risk more than 13 ticks. So you can put a 13 tick in and then put it 2 ticks above the swing high if you want to lower your stop. The first target definitely is going to be the symmetry dots. That's why I have symmetry dots here. You got to exit half your position at these blue dots when you're short. If you're doing 6 contracts, you got to exit 3. You do 4, you got to exit 2. You do 10, exit 5. That's your first set of symmetry dots you're looking for. Some traders like to have an automatic 10 ticks in their dome, on their ATM. So the exit was at 64 right here. You can sell 50% of your position here at 10 ticks instead of waiting for symmetry. If you wait for symmetry, put your stop 2 ticks above the swing or 2 ticks above symmetry. So symmetry is at 57. Put it a stop. I mean, you're out at 59. The next order of what the next subsequent position trades, the second set of symmetry down here at 36. You would put an order in to sell at 38 or buy back to cover your short. All right, so that's how you're doing on this last trade. So we come up to high value area. It straddles it, doesn't close above it. We get a pull-in bar off the spinning top. It's a second bar as a rule of thumb. There's your second bar. That's a 4 times confluence trade short because of symmetry dots, your market profile that goes on your ninja charts, volume profile, and then also my 5 sim Renko. I only trade 2 time frames on J signal, a 5 and a 3 Renko off of our proprietary Renko bars. This line in the sand hit right there. That gave us confluence also. That was a second bar trade here, second bar trade if you wanted this one also off the longer time frame. As you can see, when the short time frame 3 sim matches the 5 on resistance off the line in the sand, which is this black line, happens on all markets that you trade, you got yourself one heck of a short. So that turned out to be a great short for us this morning with minimal risk. Okay, go to gold, Gerald. We go over to gold. If we look at gold, gold's the same way. We went into a number one short. What I want you to concentrate is on the pull-in bar. We'll do this video on the pull-in bar. If you look at the pull-in bar on gold, if you look at the pull-in bar on gold, the same way. We had a flat magenta MA. We pretty much have been in a downtrend all night. If you look at it, been in a hard downtrend. So right when it hit price profile is 1177.83. I had volume at 1178.40. Which one do you take? You take the first one you come to. If they're not within 10 ticks, you take the first one you come to. It comes up to it, right up to my profile, 1177.83. Almost stops to the exact tick. I think it did stop to the exact tick. You'll see that happen on my profile a lot. Same trade's been happening for 30 years. You'll see it stop to the exact tick sometimes in my profiles. That's how accurate they are. What you got to do is wait for the second bar, usually the second bar after the spinning top or doji. After you hit my profile over here, you can see my profile hit. You got to get pulled in though. Second bar, the body of the candle closed below. That's your exact bar entry. You can do a 13 to 15 tick hard stop. You can place 2 ticks above the swing high if you want. You never got stopped out to lower your stop. Typically on gold, it's going to be right around 13, even if you put it above the 2 ticks or below the swing is what I find. Anyway, gold, you typically lower it down to 9 ticks sometimes. You do get some 9 ticks sometimes on gold instead of having a 13 or 15. Sometimes you're $90 on a $400 to $1,000 trade. I've had trades before where you risk $90, all of a sudden $1,300 trade per one contract. So it does happen on gold, putting it above the swing high. It does lower your stop. I mean crude, not so much gold so much. Usually it's about $130, so volatile. Okay, so there's your entry, there's your stop. Make sure the same thing on crude. There's your first order of business to get out. There's your symmetry dots. Bail 50% of your position. Now we're looking for a break, retest on the number 3, and that's what we're looking for right now. Okay, Gerald, go back to crude. Shut this off in a second. Crude oil. So the next possible setup is the number 3, break retest. There it happened, number 3. If you notice, I played it off the volume profile, 45.55. You broke down, you retested, and then you can play off the number 3 if you want the number 3. Or if you still got a runner running from the number 1, you just let the runner run. Okay, anticipate this breakdown, retest short. Same thing you want to do. You want to look for a break. Breakdown, close below market profile, retest. Look how it broke below low value area and volume profile, retested it. You look for the second bar for your entry on the number 3. There it is right there. So, you know, that's a little bit more dangerous than the number 1 because we're extended. But you can see how we trade off the number 1s, number 3s. Number 1, number 3, number 1, number 3. All right, make sure you get a pull-in bar. Make sure you use that 5 Simrenko though before I shut this off. Line in the sand doesn't come up very much on your long-term time frame. Look at this. It's only come up twice since midnight. This is your biggest inflection point in the morning right here. And that was confluence. When you hit that line in the sand, you're allowed to take a pull-in bar, which will be the second bar to the doji spinning top. And I don't care what markets you trade, NASDAQ futures, gold, S&P 500, S&P 400, Dow minis. I don't care what you trade. It's the same exact setup. When you see the 5 match the 3, you got a high probability trade.